Welcome to Technical Market Insights, ladies and gentlemen, where we're going to go over the market through the stock charts. We're going to take a look, see what happened last week, see what we're projecting to happen this week, go over some scans, see if there's any buying opportunities out there. If you haven't subscribed yet, make sure you hit subscribe. So this is the Dow Jones DIA, which is the ETF for the Dow Jones. As you can see, it did enter the oversold territory. We expected a possible bounce last week. That's Monday. I think we got a little bit on Tuesday, and it sold right off. So not surprising, as we're pretty bearish on the market as far as the overall ETFs go. And looking at the monthly charts, we have been expecting a pullback since mid-July on just about everything. So especially if you take a look at SMH, it's down 5% this month, 7% last month, 2% the month before, and we were telling people on MakeCashWork.com to get out about the mid-July. I want to say the article we posted was July 16th or 14th about the monthly charts being exhausted and expect a pullback, and that is exactly what we see. Now, as always, the daily charts are going to swing, so we could expect another little bounce as far as it goes that you see when it hits the oversold territory. Thought it might have happened last week, but it didn't. It did for about a day or two and sold back off pretty hard. Might see a bounce next week, but I'm not trading any of these bounces. If anything, I'd be buying the inverse ETF when it gets overbought, because this market's going to trend down actually for, I believe, a little bit longer. Probably if you look at the monthly charts, I say we got another month or two easy. I would expect the technology sectors to at least test this 20 bar moving average on the monthly, which would put SMH in 125 area. Triple Qs would be 320 area. Now the Dow Jones and SPY already broke those, and we could definitely see that pull back to the bottom Bollinger Band. Guys, this is all just based on the charts, and if you take a look at what's going on around the world as far as fundamentals go, you can definitely see why we're in a high rate environment. Recession, everybody's predicting is coming next year. Everything going on over in the Middle East and around the world. We're in two wars right now, well, dabbling in them. And we could see a third war coming soon as far as I'm concerned. If I'm China, why wouldn't I try something along with the rest of our enemies? Anyway, back to the stock charts. When we look over here at our sector indexes, we do have two bullish ones that stand out. Let's go to the daily. Consumer cynicals. This is a sector that popped pretty hard, 15% pop back in September. Now this is nothing. If we go here, we can pull up everything in here and we can filter it to look at the most bullish ones. And okay, so there are a lot of bullish stocks in there. These are the bullish oversold ones. Abercrombie and Fitch. These are the kind of companies in this sector, and I'm not a buyer. Somebody came to me in the streets asking me if I wanted to buy a company. Now here, e-commerce wise, maybe, but Toyota Motor Company, we went over that when we talked about Tesla a few videos back, where I said I wouldn't enter Tesla, that it dumped like a rock. Let's just pull up Tesla just to look at that. Ooh. If you go a few videos back, you'll see. So yeah, right here, I was asked about Tesla, went over the video saying I wouldn't touch it until it's oversold. And I wouldn't, because it's probably going to touch the 200-day moving average. Don't remember verbatim every word I used, but go back and look at it, and what did it do? Right afterwards, it sold off pretty hard. It crossed under the 200-day moving average. Last time it did that, you had about a 60% pullback. So be careful in that area. Let's go back over here. So our other bullish sector is energy. And let's see what's bullish out there as far as the stocks this sector index holds. we got a lot of bullish oversold, quite a few bullish. Like I said in my previous videos, really oil is the only bullish sector out there. All right, energy is your only bullish sector. I don't like trading commodities, so we'll get to that in a minute. But just take a look at some of the ones that's out there in here that's bullish and oversold. So guys, if you don't use TC2000, I will say I love it. It does cost to use. They do have a free account, but I do love and take advantage and prefer paying for all the options you get, the scans, the alerts. You really get to do a lot on this platform. If you can think of it, if you can dream it, it can happen. MPC is one I called down here on the first trade. Of course, we would have sold it when it got overbought, and it's lining up for another swing as far as I'm concerned. But as far as oil goes, ladies and gentlemen, last week we predicted a pullback because it was overbought. And then we would have done the video on the weekend. So looking at Friday, we expected a pullback because it was overbought, and we see that's exactly what happened. Now, it didn't hit oversold territory, but sometimes bullish sectors do not. Sometimes they don't go all the way to oversold. As you can see down here, it may rally back up from there and break past that high we were talking about. Now, if I'm trading oil, I'm probably trading XOP, leverage version, which would be Gush. But what I don't like about them yet is they haven't touched the bottom Bollinger Band. They are oversold, but I don't know. To me, I'm just not feeling it. Now, oil, as far as that goes, I would be in UCO. So I added some of these on here because I explained to you guys before. Any ETFs, I trade leveraged versions of them, so you'd be up. You could have made. We talked about this trade in previous videos. Obviously, it's happened, already. But if you got your average right around there, you'd be up anywhere from 10 to 15% on that swing. And I don't know if we're going to see another pullback to the oversold territory as far as oil goes. If you look at the weekly, we are in USO. I know USO looks a little different. So weekly looks like it could bounce, break out, and trend in between this 20 bar moving average and the top Bollinger Band. Obviously, it's got some resistance right there in that $90 range. But as I said a few weeks prior, I believe we're going to break that 83 area pretty soon. Mainly because it's the only bullish sector out there. So if we take a look at the bullish scans. Let's just finish up with the market. Right now, everything is under the 200-day, not everything. So SPY dropped under the 200-day moving average, is oversold. You guys know how to trade. If it's under the 200-day, I don't mess with it. Now, it could easily drop under the 200-day and come back up like you see here. Or it could easily drop under the 200-day, come back up, and then just tank 20%. Or even more, as we see in some of these other ones we'll go over in a minute. But anything as far as trading SPY or the leverage version, which is what we usually trade when the market's trending sideways or at least up, preferably sideways and up. You can get some good swings out of them. But we don't trade any of them when they're under the 200-day moving average. So right now you got Dow Jones, which would be UDOW. That's what we trade if we're trading Dow Jones. And SPY, both of those are under the 200-day moving average. So we're staying away. We're keeping an eye on them. We're looking for the monthly chart to definitely pull back on these as we expected. You can see 360 and SPY pretty easily. Just look at these monthly charts, ladies and gentlemen. I know nobody wants to hear that. I'm just giving you realistic expectations. Of course, everybody wants to see the market break up and go to all-time highs. Don't see that coming. This is oil's monthly chart. As you can see, it does have a lot of room to kind of run there. Now XBY, that looks like that. I mean, it's actually down 12% for the month. Man, this thing's just been wrecked. But if you look at the support right there on the monthly chart, and it's just starting a 200 bar average. I mean, you may have some support there, but it's been hammered since it crossed under the 200 day. If you look at my stock twists, I mean, geez, I even called all these moves months ago, back here. Said back here, this is the right shoulder on the head and shoulders testing the 200 day moving average, and called basically low 80s, low 70s, and low 60s. If you go to my stock twitch, you can find all that. But that's just an ugly chart. And if we change this to, which we will in a second, you'll see everything bullish wise comes up on bullish ETFs, or the inverse version of most of these ETFs. So everything as far as these markets go, go back in, little computer glitch there. As far as the market goes, everything's, as far as the major ETFs, are trending down. They're going to be in a downward trend as far as what you see here, probably for the next few months if you look at the monthly charts. At least that's my expectations. That's how I'm trading. That's how I'm positioning myself. If you look at the weekly, you could see XPO or XOP and USO actually trend up. XPO came to mind because we also talked about a few buying opportunities out there. Now, if you guys know me, once I find that the chart is bullish, I then tell everybody, and I do it myself, I go and look at the fundamentals of the company. I want to make sure they're making money. So they got to have a PE there. It's got to be a decent PE. Want to be paid a dividend. Why not? The employees of the company get paid. Why shouldn't an investor? I want to make sure it's a company I like. Okay, so we went over some. XPO was one of them. I don't think that's got a PE at all. When I look through them, same with FN, as far as some of the ones we talked about. Now, all these are still possibly good trades. You may just have to be a little more patient, keep your average low. But X is one that, when I looked at it, Morgan Stanley, I think, I always look at that analysis research as well, just because they do have good information in there when I'm checking the fundamentals of a company. But this would have been my favorite one out of the two, and an easy trade. Keep in mind I do have earnings coming up, but right now that's up 8% in 4 days. If you didn't take advantage of that, when you looked at the ones that we went over, just keep an eye out for some. Like, I think when I looked at it, dividend wasn't high, might have been like 1% or so, but the PE was a 6. Morgan Stanley said it's their top stock pick coming up. One thing I do like, if you look at the, might not have been the weekly, but the monthly, which we looked at when we looked at, I mean, this thing, look at the monthly, two things come to mind. Man, if you could swing each of these trades on the monthly chart, which that's a lot of months right there. So, but like right there, it's 42% in 6 months. Got out right there to right there, 72% in 3 months. Okay, you could trade the monthly chart just like you can the weekly chart, the daily chart, the hourly chart. So yeah, 60% 6 months, 42% in 4 months. So when it gets down to the, what you can see close to the bottom Bollinger Band, didn't hit oversold, did right there. So you would have had that 50% in 4 month swing. But if I zoom out and look at this monthly chart, drew a couple trend lines. This thing breaks over that 200 bar moving average and holds. It's in a steel company in a recession. Don't know if it will, but there could definitely be some underlining, doubt we're getting much steel from China anymore as far as fundamentals, but I don't know. I haven't looked into all that. I trade basically on charts, and I did like that. When I went to the fundamentals and looked, I didn't dig as far as into the long-term perspective because I'm just looking for short-term. I don't think I'll hold past earnings or through earnings. We'll see. But that was a buying opportunity that surfaced last week, along with other few. If we go up in here and we change this bullish look to ETFs, let's go over here. Alright, most of the ones we're going to see are the inverse. So this is XBI. So inverse leverage ETF. So we called this right here 123% in 3 months. If you go to my stock Twitch, you can see that. I don't think I posted an article anywhere. Those are the kind of swings that are just lovely. This is inverse for financial market. This is inverse for real estate. So everything that's bullish right now, besides oil, I won't say everything because there's probably some, but yeah, that's short Dow. There's probably some in here that are not bearish inverse options. But for the most part, that's what you're seeing. Yeah, I think this is a treasury. Oh, it's ultra short. Anyway, but gosh, gold miners is in there. Gosh, uranium. Huh, it was cool to come back to that because I forgot. It would have been, yeah, right around 1017. We said, hey, that's oversold. So it could be a good swing trade. And it was. Looks like it was about a 10% swing trade. Obviously, would have got out. Always look close to the overbought territories. I like to lock in my profits. So my alerts go off about 75. That green line's 80. And then I get out. Depends how strong it looks. If it looks strong enough, I'll hold it. But all right, let's look at some bullish oversold. We got a bullish oversold ETFs. Let me change that just to see if there's any buying opportunities out there. We do have. You got Gush, which is the inverse version of XOP. Of course, XOP's in there. We're not messing with that. So some of these, like that's oversold. Well, like I said, I always set my oversold and overbought a little high, so I think it's 30 on the oversold, just so I can see it coming, right? Because some of them don't always touch it. So that I'd wait to pull back a little more, especially in the oversold in the bottom Bollinger Band. So we do got some ETFs out there that are bullish and oversold. The main things I'm going to be looking at is trading prop, which, I mean, if you draw a trend line there, that's pretty strong looking resistance as far as the top goes. But oil, like I said, that is your most bullish sector out there. It's what I'd be keeping my eye on. Otherwise, it's a stock picker's game. Let's trade this. Let's change this to high cap. Let's see what kind of buying opportunities we got out there for the overall market. So Lilly is one we've called multiple times, even back here. We gave you 34% there if you would have held through all that. Another buying opportunity there we called on this channel. We gave you another 15% run. But it's entered and oversold again. Now, once again, I like to see it touch the bottom Bollinger Band, so I wouldn't rush in too quickly on that. This is one, I believe it came up on our scan. Maybe not, I was going to say last week, but I might have. But once again, I would have checked. Just because it comes up on a scan for oversold and bullish, you want to check the fundamentals, okay? I'm not sure what kind of PE it had, but there was better opportunities out there. I barely even looked at this. All right. So if earnings came up or just dumped before earnings, let's real quick look at some news. Yeah, so it had earnings. Like I said, I don't like holding through earnings. My longer stocks I will, my long-term account. But yeah, I mean, I definitely wouldn't have held that through earnings. It's a staff, yeah, I mean, we can get to the fundamentals of that, but I ain't going to. Well, that's coming up. I'm looking at the ones that's actually down right now first. This pharmaceutical company, we ain't touching that. We got a gap down. If I had to guess, it had earnings. Not messing with any gap downs. It's not a bad looking chart. Also not a bad looking chart. Maybe a good, this is one of the bigger drug manufacturers, one that I would trade. Very few pharmaceutical or drug companies I would trade or buy. But this chart I do like. Obviously always do your DD, make sure it's lines up with what you're looking for. BWXT, I mean we own this and are adding currently as it's oversold. Been adding on every drop since January. And multiple accounts. DTM chart looks good. This right here is Welltower. This is one of my favorite REITs, real estate investment. So there's two REITs I would own right now. All right, as far as real estate investments go, it's this one and this one. Needless to say, this pays about an 8% dividend. Okay, so both of these I really like, own for the long term. And if you check out, they're both in healthcare facilities. So if I had to buy real estate right now, like to invest in, I would buy these, and that's why the easy way for me to do that are through these two companies. So Omega Healthcare Invest and Welltower. So if you hear anybody out there talking about REITs, they probably look like, their charts probably look similar to these. Okay, I'm out. Right, you know, for one, it's under the 200 day, it looks like garbage. Alright, just for an example. Let's see what else we got out there. H&R Block. Guys, we can go through all these on the scan, but right now we got 76 stock charts out of the high cap 1,000. Only 76 with the overall market oversold that are bullish and oversold. So there are buying opportunities out there. You just need to dig through it, find where you want to put your money, make sure the chart looks good. I mean, Meta, if you're into Meta, I'm really not a fan of that company. But I mean, right now the chart is coming up as bullish and oversold, and it'd be a buying opportunity. So, depending on how everything else lines up. Dell, we can call it one of Dell swings back here. Let's delete all these. Well, you can see, to me, it's not really a chart I'm looking for. I would have liked to see it, that last swing, break above that previous high, and then trade down. Right now, this looks like it may actually bounce in between that 20-day moving average and the bottom Bollinger Band until it fills that gap. Guys, the point of looking at all these is so you can look at charts and just tell what's going on right away. The more you look at, the more it's going to click. And guys, with TC2000, you could go. So this is one I looked at prior to, not bad. Let's say you wanted to look at the Qs and you want to look at all your bullish opportunities there. Bullish oversold. So we can go through all these. And this is what I do during the week when I'm ready to put money to work. You go through these and you find what works best for you. Adobe, I was looking at that chart earlier, that actually looks pretty good. Like to see it break through that resistance right there. As you can see, it's touched that area twice, couldn't break through and it's pulled back. I think with AI, Adobe has added a lot of AI features lately, which I think almost drew me back to using it. I've used Adobe many times before. Cintas. Guys, what we are looking at next week, we're looking at a possible bounce, but it's nothing to get excited about. Like these are, and I'd be looking at oil to see if it continues ripping up. XOP, That might actually be a trading gush, which I would just go in light, maybe 20%, maybe even lighter, just in case it does pull back. I do believe it'll find that support right there. I hope so, because if not, you're under the 200-day. But I believe with the way oil is going to be looking, those would be my two sections to focus on for bear or for bullish activity. Otherwise, right now, you can still trade these. Right, it wouldn't hurt you too much as long as you got the capability to keep keeping your average low. I mean, but look at that. That's about to bust through the 200-day moving average right there. Man, everything's going through that 200-day. So yeah, I take that back. I'd definitely watch out. I mean, it's nothing I'm touching, but yeah, it's not far away from going through there. Last time it did that, ladies and gentlemen, I sat out all of 2022. I mean, besides looking at bullish stuff, but the overall market, I mean, it saved me 35% loss. By the time it jumped back over, it was still down 20. Man, could definitely see some bearish action next week. I wouldn't count on the bounce too much, but it is, as far as, I mean, your daily, weekly is pretty still oversold. So yeah, I mean, we could still see this trend in between this trend line, but it's coming down, ladies and gentlemen, and it might not stop at 125. We may see it. I mean, I hope not, but it'd be a heck of a buying opportunity. That thing went down to 85, 90 to 80, and don't ever say it won't happen. The market always trends. It's always healthy. And you just got to be ready to take advantage of it. Know how to put your money to work. So that's what we're looking for next week. Looking at continuation for oil. And it might just rip right past there. Don't get me wrong, we could still see it pull back to the oversold area, the bottom Bollinger Band, while the rest of the market bounce. And then you'll see it the opposite swing probably, where oil will rip back up, rest of the market will drop. So don't know, but you should have a good idea of what could happen next week in the market. Make sure you hit subscribe. I'm out.